Jeremiah Brown is the investment principal at Anthemis, focused on investing in early-stage AI companies in regulated industries. He is a former geophysicist and has been a venture investor in Silicon Valley, Berlin, and London. He has a background in deep technology investments spanning construction and built environments, energy, manufacturing, climate, and life sciences. He is particularly keen on these vertical intersections within fintech and insurtech. Jeremiah, welcome to the Future Makers podcast.
Thank you. Thank you for having me.
Of course, it's my pleasure. I'd like to start off with talking about you. So I would love to hear, in your own words, how did the journey from geophysics and product move into what you're doing now?
Yeah, absolutely. I think whenever you're kind of as a scientist and drilling into a big problem, you can build this appetite of curiosity. And many PhDs end up going into academia or going into maybe like an R&D function at a large company or even at a startup to continue that curiosity itch. I was very fortunate to be in Silicon Valley where I did my PhD. And so at Stanford, at your doorstep, there's a lot of startup activity. There is a lot of venture capital activity. There's a lot of opportunities that are that are pulling you many different directions outside of maybe pure academia. And so after I finished my doctorate, I decided to join a startup that had recently been acquired by a large corporate. The startup was actually one that I knew very well because my PhD advisor had actually started the company about 10 years prior. So I joined that company to drive a lot of the product features that he/me wanted to continue to build out at this startup that was recently acquired by a larger energy company. So I was in a startup, but a part of a big organization, which had its benefits, but also its downsides, just because things started to move a little bit slower. It was a little bit less agile, but still incredible work that I was able to do there. After business school, because I think for me it was really, which I'll get to at some point, I'm sure, in the podcast around, founders that I really like and latch onto are the ones that can really balance sort of the technical and the commercial. For me, I really wanted to, build out my commercial prowess, so to speak. And so I decided to do Stanford Business School to really sort of refine my business acumen alongside my technical expertise.
And that pause there.
Yeah.
Because a lot of people who at least reach PhD level, they kind of think, I'm in academics, I've gone this far, I might as well stay within the university kind of environment. There is very few people coming out of that environment to then become founders, to then become, move into a more commercial sector. What was it in you that felt that you wanted to leave, the university doors? You were at Stanford. You could have continued down, in a more academic route.
Yeah. I think, that's a very good question.
Yeah.
I think for a lot of people, the thought of founding a company is a bit scary. Feel like a lot of us are risk averse.
Yeah.
And so to be taken out of our comfort zone, you need to have role models. You need to see people that have done it, and that gives you a little bit more comfort that you can do it. So my time at Stanford, I saw a lot of people either in sort of my field or outside of my field, just on campus, or friends of friends that were starting companies, that were launching companies, that were getting backed by very reputable tier 1, tier 2 VCs. And so, that slowly created this if they can do it, I can do it too. I know the journey's not easy, but it's doable. And so being in that part of the world, it helps to motivate. It also gives you a little bit of direction because there's a lot of people you can talk to as well on the investing side or on the founding side. And also there's a community there that you can tap into to support you on that journey. So I think that's what really kind of planted that seed, was seeing success stories and seeing other people, around my age at the time that were doing incredible things. And so I think if I was maybe somewhere else and I didn't have sort of that concentration, maybe not, but there, it was just right on my doorstep.
Yeah, and I think that's really important. Mentorship, modeling, and having a community is just fertile ground to, for a budding entrepreneur or
Yeah.
somebody who'd want to pursue a more commercial route. But please continue. You were talking about pursuing an MBA.
Oh yeah. For me, there's many routes. You can go head on and start a company
Yeah.
and build and make mistakes along the way. I decided to go to business school just because I wanted to not only refine my business acumen, but also build network outside of my core science community. And there a lot of people end up doing a lot of different things, and so that's a community and a network I still leverage to this day, and something that I really wanted to prioritize building as well too. And so after that, I was at a crossroads. I could go and found something, which I was in discussions at the time with some classmates to do that. Or I was thinking about going on the investing side. And just so happened I got an offer to join a VC that was growing back in the day, or still is growing quite rapidly. They just set up or soon to be setting up here in Cyprus, Plug and Play, which at the time was quite big. Now it's very, very big. But their VC team, which was very much concentrated in Silicon Valley at the time, was expanding quite rapidly. And they were launching several new verticals. The one that I joined and was doing investments in was focused on industrial IoT and industrial manufacturing. And so that really spoke to my background to some extent, these like very hard to change industries, very sort of, sciencey or engineering. And it was kind of ripe for disruption, the digitalization of everything industrial at the time, which was really, really great. For some reason, I was wanting to leave Silicon Valley. Not for some reason. I think I wanted to explore new tech ecosystems and get outside of the beautiful bubble in which it is. And moved to Berlin. So at the time, I had an offer to join a fund that was getting started at the time. Recently, that fund closed their third, so they're now pretty well established. But at the time, it was a fund focused on construction tech in the built environment called Fundamental, based in Berlin. Global mandate, investing seed to Series B. At the time when sort of a construction tech built environment thesis was really starting to gain momentum in the VC world. And so that was a great opportunity to, pack my bags, move over to Europe for the second time. I worked in Europe after my PhD when I was in product in the Netherlands. This is my second time in Berlin. And it was absolutely incredible because it was scrappy in terms of building a fund from scratch. I was, the first non-partner hired to the investment team at the time. And so building a brand in VC, I think, is incredibly hard because you're competing against the Sequoias and the Excels of the world. You don't necessarily have a track record, when you're a first-time fund manager, or maybe you did previously, but in terms of that fund, it takes 10 years to build that. So to be there at the very, very beginning, to be refining investment theses, to be looking at so many different companies in the built environment space and refining that thesis over several months and then changing direction on actually we think this is what's going to be like the big fund returner versus what we thought 6 months ago, or we really should be doubling down on this market because actually we see this market maturing faster, or what's happening in the at the time B2B SaaS that's not going to be applicable in construction tech, or that's not going to be applicable in other industries, but could be applicable in construction tech. So you have these very, in terms of just positioning. And it was also, I think, the time where you really had strong conviction, I think, in the broader VC world that specialized funds could drive outsized returns. So you have the large horizontal funds and deep-pocketed ones, like I've alluded to. But, you had specialized fintech funds, you had specialized, life sciences funds. So having one that was kind of focused on built environment made a lot of sense because you really do get specialized. And you do, if you're doing your job right, are seeing close to 100% of the startups building in that space. So you really then have a privilege really to pick the right ones. And you probably are held to a high bar to do it since that's what you're breathing day in and day out. So that was a really great opportunity to move back to Europe and to start, building my venture career.
So what did you see? I mean, you just left Silicon Valley, which, is known as the top of the top, the of the elite. And then you moved to Berlin. How different were the markets, and how different were the approaches, or even the the relationships between investors and startup companies. What was the scene like?
Very, very different.
Yeah.
I mean, Silicon Valley's, has taken 40 to 50 years to build, and to build out those network effects, which are very, very well established. Berlin, especially at the time, didn't have those built out. It was a budding ecosystem, a technology, soon to be technology powerhouse, or one of them in Europe. But it was still kind of, making its way. It wasn't as international as Silicon Valley is. You didn't have as many of sort of like the name brand funds. I would even say even the ones that were investing in Europe were kind of being pulled more to the London or UK ecosystem, less so to continental Europe at the time. And so it was growing. It was attracting capital, especially at the early stage. But you could tell it was the egos were lower. It didn't have the hype, and that's what I found very beautiful about it. That there was so much potential, and that potential just needed time to kind of grow. And if you look at Berlin now, it's probably one of the top 3 ecosystems in Europe. And then over even the past 10 years that I've been in VC, they've had incredible exits. Some really well established funds have like international prowess now. And so it's really sort of grown into, I think a very well-respected technology ecosystem where 10 years ago, I think it was, but it was still building out kind of the success stories. It was still building out the track records of the fund managers and the funds. It was still positioning itself around how do we sort of win in this very competitive VC world. What do we focus on? How do we sort of leverage, let's say, our industrial base in Germany, which is very, very powerful to go after, logistics and supply chain, or like mobility, or every VC ecosystem has to kind of find its like sweet spot and what they're good at, and that's how you sort of, and where the founder is going to be originated, and that's how you can sort of build something that's like long lasting, that can staying power.
I want to ask you a question. I mean, it in a way it does relate to Cyprus, but I think it's there. Germany, as it was back then, is a great example. Do you need the infrastructure to be there before the culture can grow, or can the culture grow with the infrastructure, or do you need the culture first? Which is it, a chicken and egg kind of situation, or is it a bit more complex than that?
That's a very good question. I think it depends how you define infrastructure. I would argue you don't need the sort of like big corporate infrastructure. You don't need sort of the big funds, so to speak. But you do need sort of the grassroots infrastructure. The hackathons, the houses that allow founders to like sit together in a room and just build and exchange ideas. To sort of iterate, to then start a company and then launch it. So you need, some type of infrastructure where there's a support system. And that kind of originates just a lot of, community, but also back and forth where like really beautiful ideas can emerge. And then over time, if you have that, then you start attracting sort of the layers around sort of building like the big infrastructure. But I kind of think about infrastructure, especially like, if I think about Cyprus, it's really kind of being founder-led or like, very entrepreneurial, let's see, like type of people that are creating sort of these pockets of communities with other aspiring entrepreneurs, and then sort of building out like an onion going from there, which I think Cyprus is a good example of that around, what it was 10 years ago and where it is now, and sort of the layers that are being built on top of the ecosystem with the Doer Summit, with Plug and Play coming to Cyprus. So all this is all adding on over many years, which is really great to see.
So what is the role of like the governmental support, or even like support on the European level, so from the European Commission?
Yes.
Do we need those, or are they just bonuses?
I mean, that's a hard one, because if you go to the U.S., they would say you probably need less public support and less public money. In Europe, that's very much how a lot of the VC ecosystems have gotten started, which is very, very good. So different approaches, but both approaches I think were needed just based on structures of the countries or the continents to get, the industry moving and supporting, the best talents and growing the best companies. And so specifically with respect to Europe, I think public funds in the European Commission, they're critical because you don't see as much private capital be unlocked yet in Europe as it should be, which is always a debate and probably will continue to be so. But we're moving in the right direction. But until that, really happens, the European Commission, the European Union, they have a critical role to play to continue to, support the venture industry, especially at the early stage, to keep the momentum. And I think it's even more important now because European sovereignty is a very, very strong topic and theme right now. And how does Europe, continue to sort of build its own autonomy and be able to compete effectively against the China's and the United States of the world on the AI front? The EU plays a very, very critical role in that as well too. And so I think it's great. I think it should continue. And hopefully over that time, you can start building confidence in the private markets to do even more in Europe as well too.
Let's go back to Anthemis. How did you join and what is your role in it now?
Yeah, so I joined Anthemis a little over 3 years ago. I'm one of the investment principals, very focused on what we call, the core theme is high assurance AI. So I'll get into what that means. It's a very unique sort of focus that we have, and we really recently launched an AI strategy which I can speak to.
Yes, please.
But Anthemis is a early stage venture capital fund. It's been around for about 16 years. It has about $1 billion under management with offices in London and New York, and we have about 150 portfolio companies. We are multi-strategy, so mainly early stage. We also have a venture studio, which focuses on investing in female-led companies at the pre-seed stage. We recently launched a venture debt strategy as well, too. And so we really are kind of, full stack and continue to grow from there, which is really, really exciting because it enables us to, back companies in different forms based on the needs of a founder or company at the time. Over the first 10 years of Anthemis, it was very focused on fintech. The founders come from financial services. I think around 2010, that's when everyone was talking about what does the future of payments infrastructure look like, which kind of turned into fintech, which then turned into, in the late 2010s, embedded finance. That every company is a fintech company. If we look close enough, everyone is going to be embedding some type of fintech product, along their product roadmap. And so with that, Anthemis evolved from being just pure fintech to investing in embedded finance in every industry you can think of, in construction, in energy, in mobility, in healthcare, as well as in financial services. And so I joined, given my deep tech and energy background, I really joined to look at this intersectionality between financial services and insurance with other industries. Specifically, I did a lot of work looking in like industrial space and mobility and also in climate tech to double down on that embedded finance thesis that, how do we sort of help founders that might come from a pure science world or that are building, let's say, in climate tech, and help them think about, actually, when I'm at a Series B, I might be able to integrate some type of payment rails into my product to really sort of unlock growth at scale once I've reached, a certain stage. You've had these conversations. And so, what I still get excited about is kind of this intersectionality, because I really do think, especially like insurance, but also just financial, it underpins the whole world economy. And so, I think founders that kind of get that, even if they're pure science brains or pure engineers, you kind of can help them, or even if they already have kind of that way of thinking, I think it just lays really strong groundwork to build an incredible company.
Because you've moved out of climate tech, as I understand it.
Yeah. We still look at climate deals, I think, as the world has evolved and, we see kind of AI eating everything. We launched an AI strategy at Anthemis, where I still like to look at deals in the energy and climate space, but it's a lot broader than that. And so we recently launched a not-for-profit, and I'll get to the fund in a second. We launched a not-for-profit last year out of Cambridge, UK, called Common AI. alongside some leading UK technologists that have been kind of cornerstone in building kind of the UK ecosystem. And we did a joint venture with them to launch this not-for-profit called Common AI out of Cambridge, UK, to essentially help AI native companies accelerate their time to market by tapping into like a shared pool of technical resources, which we call digital commons. Let's say I'm an AI native company in the UK or somewhere in Europe. I can join that platform and I can, tap into a lot of technical resources as I build out my secret sauce to accelerate my time to market. And then plus, we also realize, hey, compute is a thing. It's very expensive, as well as, provisioning that infrastructure is difficult. So we also have a Common AI Compute Co. that helps do the provisioning of the infrastructure for the startups that join. We recently announced that ARIA, which is the UK's research agency, is investing £50 million into a scaling inference lab on that platform to drive down inference costs by 1,000x over the next 5 to 10 years, as well as we're setting up a high assurance lab, which is really looking at if I'm an AI native company distributing into regulated industries, that means I need to be hyper sensitive around compliance, around auditability, around traceability. I need to build a product where the margin of error is very, very small and where failure is not an option, where precision and accuracy is very, very important. And so building out a lab specifically around high assurance, and that's my focus now. Really looking at companies, AI native companies that are looking to distribute in financial services, distribute into healthcare, distribute into energy, or distribute into industrials or logistics. They're very, very regulated industries. And so it's not like building a vibe coding app, It's really being able to speak and distribute into enterprises, which are going to be very, 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 very protective over their data. And that probably don't have a clear AI strategy because they don't want to be compromised. And they also need some type of, compliance grade structured data that they are able to give to a company, but need confidence that it's not going to be shared. And so, that's going to be, I think, AI 2.0. These are my words. You've seen incredible success stories over the past, let's say, 5 years and companies that are just growing like hotcakes. I think that next wave is going to be when a lot of these regulated industries start having a clear AI strategy and how are we going to adopt AI at scale? How are we going to work with early stage ventures? I feel like that takes a lot longer to figure that out. And so once that comes, there's going to be immense opportunity for, the companies I'm looking at and the companies that I'm investing in, because a lot of those industries that they're distributing into will have figured out in some way, form, or fashion how they, want to adopt AI, whatever that means, in the future.
What was it that drove your interest towards these more regulated industries?
So, when we at Anthemis were thinking about kind of, what the next 10 years of venture looks like and how do you sort of really play in this world of AI, the launch of Common AI was, really great. It's, really, I think, positioned to do really great things for the UK and Europe. But then also having been fintech investors and investing in financial services for the past 16 years, which is a very highly regulated industry. It's like we've done this before. And we kind of know and have a lot of learnings over the past 16 years around what doesn't work, what does work, what founders have been able to succeed and how, and what kind of, failed. And so having that track record in one of those regulated industries, it made a lot of sense to say, okay, we kind of get this. There's also other regulated industries as well too out there that we can be investing in, but we definitely know financial services. So it really makes sense to kind of have a venture product that can, invest in companies doing that.
Is there a difference between when you're investing in, let's say, a UK company that has one set of regulations, and maybe an EU company? Do you have to adjust, or do you just kind of concentrate on UK where you are more comfortable in?
So the AI strategy is UK and Europe.
Oh, okay. So they've adopted. Okay.
So it's UK and Europe. Like Common AI's, the not-for-profit is headquartered in Cambridge, UK. but our AI fund strategy is UK and Europe.
Okay.
It's really interesting because I was just speaking to someone about this. It will be very interesting to see, let's say, in the next 2 to 4 years, because you have the EU AI Act coming into force. And so the UK right now is trying to decide how do they engage on that front with the EU AI Act. On one hand, they want their companies, which is their closest market, to be able to sell into Europe. So they're going to have to adopt some elements of the EU AI Act. But I think the discussion going on in the UK is how do we, keep our own sort of autonomy to position ourselves the way that we see fit to continue to compete, like in the way that, the UK wants to in this AI race. So it's, I think it's TBD to see kind of how the UK positioned itself in regards to the EU AI Act. But as investors, we're investing in the UK and Europe. And so the EU AI Act and the companies that we invest in on the continent, that's something that we'll be very on top of in terms of like how we, in terms of regulatory regime, when we're, looking at a deal, that would definitely be a topic of discussion for us as well, too.
Lovely. All right. Let's talk about deals. So when you meet a founder for the first time, what are you trying to understand in the first 20 minutes or even in the first 5 minutes?
If they know what they're talking about, founder market fit, do they have the credible experience, especially because I'm looking at companies, building for regulated industries. Typically, these founders have worked in those industries before, as opposed to maybe doing consumer or something else. So have they worked in financial services? Have they worked in insurance? Have they worked in the energy industry? Do they get sort of the nuances that can help me build confidence that they'll be able to sort of build and have a credible go-to-market, and also be able to drive, whatever the type of product that they're building. So I think that's one kind of credibility, founder market fit for what they're trying to do. I think the second point for me is it's not only about, I guess the market and the founder. I think the team dynamics, if it's not a sole founder, is very, very important. I've been on calls where you just see this seamless chemistry between the 2 co-founders or the 3 co-founders, and you just build conviction that they'll be able to work together and just build something very, very credible. They're not talking over one another. Someone's just not trying to be the loudest one in the room. I think that's very, very critical. As well as, one thing that I have started to really sort of think about over my many years in venture is that we, as venture investors, we all get caught up in what's the shiny product or the shiny industry at the time. Let's all do investments in it. And, everyone's doing it, so let's do it. The founder does not have the luxury to start building something and then say, okay, the VC appetite has changed after 2 to 3 years. I'm going to go build something else.
Yeah.
And so it's also really sort of pressure testing sort of the resilience and perseverance once maybe the hype around whatever it is has like kind of gone away because they have 7 more years to continue to build until they realize an exit. And so it's really kind of like pressure testing. Are you doing this for the right reasons? You do see a clear opportunity and there's a ton of cash to back you right now. But if times get tough, and they probably will at some point, what's your positioning? How do you continue to win? What are you going to do when you feel like, you're running out of gas or you're not getting the support that you need? And I think that's becoming even more critical because these hype cycles, everything's compressing with AI right now too. And so what was maybe a 3 or a 4 year cycle might be compressed now to 18 months. And so I think that's even more important, for early stage founders to be able to sort of just navigate the fast changing world as they build a company that they still need to build for, 7 to 10 years.
How do you see all of that in 20 minutes? How can you see somebody who is resilient enough as a person or convicted or just determined enough to build their product despite any challenges that may occur?
Yeah. I mean, it's very difficult in a 30-minute call, 20 to 30-minute call. Usually over the course of the diligence, you have multiple touch points. But at some point during the diligence, I always ask, what was your biggest challenge in your life? And then how did you overcome it? Or what are the top risks that you see in building this company? And after you identify those risks, okay, what is the mitigation plan for each of those risks? Give me at least 3 of those. And nothing's fail safe, but you just want to start getting into the thinking of a person and how they think or how they navigate through problems or have in the past. And you really don't know. You figure that out over the 10-year relationship. But at least you get some indication of, the person, how they think or what they've done before to give you conviction that, they're here to fight, fight for themselves and for their company, for, the people that they hire as well, too.
Okay, what about investing in first-time founders? Because you invest in very early stage startups. You do come from a background of academia. You've seen a lot of people from within that background move into a more commercial sector.
Yeah.
How confident are you in being able to spot someone who will be able to thrive out of that academic background in the more commercial sector?
I guess it can be 2 things. So you could have the very hardcore, let's say, academic that just needs some coaching and some teaching around how do you sort of build a company. So someone that's amenable and open to saying, I know I'm really good at building this, but I just have no idea how to build a company. Can you help me? Or can you kind of coach me and guide me? That's a very, very good and green light. And that's very, very good. As opposed to someone that, wants to build a business but necessarily doesn't want to put in the effort to kind of learn about how do you sort of build a very great business, talk to the right people to help them do it. Also, I think having come from that world, you can get very in a perfectionist mindset because at the end of the day, as an academic, you're trying to solve for a problem. So that means you're drilling on something for months and months and months at a time to get to some end of enlightenment or something where someone's going to learn and there's some, marginal step up in sort of, something new in that field. And so that's very, very different than building an early stage company where you have to move very, very fast. You have to be willing to ship something that's not perfect. You have to be willing to break things. And you have to be able to be agile and shift gears literally within a few days if you see something's not working, which as an academic, that's definitely not the case. If you are starting a company that I have to shed that way of thinking, I should still be hyper-focused on product. I should still be making sure that has some level of defensibility and it's the best in market. So that's good because that's what you are trained to do. But then it's, reorienting and shedding kind of that thinking and saying, all right, let's just move fast. Let's just see how we can get this out and get the customer feedback and hopefully, have someone start paying for this. So then we can continue and sort of build the next thing. So yeah, it's a much more of a paradigm shift, I think, in the brain, which is easy to overcome for some, not so easy for others.
Yeah. And you kind of mentioned that you actually like it when a founder actually tells you honestly, I don't know how to do this. I don't, I know everything else. I'm not that business savvy. How many founders have you met that are open enough or have enough confidence to say, I don't know this?
There's some ego that comes along with that.
Definitely.
And so being kind of vulnerable or being able to admit that maybe turning that into a company is difficult. Of course. And so that's personally not a good trait in the sense of backing a founder like that, because that means they'll probably make a lot of mistakes in the process of trying to build a company. And they'll have to learn kind of the hard way that I need to be a little bit more, coachable and just listen and learn. Don't pretend like I know everything. Sort of looking at more sort of deep tech of those companies. It was really kind of just having or meeting sort of these founders that were very, I would say soft in the sense of amenable, being always curious, as opposed to saying, I know this. So I think that curiosity factor means, I'm curious, how do you build a company? That means they're probably going to take the same approach or maybe, doing what they did in academia, but then going head on and doing that on the business front. So, speaking to other founders, speaking to investors, trying to figure out from the very, very beginning, how do I sort of not make the same mistakes maybe other people did? And so that they go in very sort of like open-eyed and like ready to kind of go on like the journey. So it's, I guess, what I'm trying to say is very difficult.
Yeah.
I haven't met too many, but they do exist. And I think especially in these like very well-established ecosystems like Silicon Valley or in London, you're starting to see more and more of them because a lot of them aren't going the academic route. A lot of them are joining Anthropic or OpenAI anyway. And even as a research engineer there, you still need to get sort of business stakeholder buy-in. You still need to, even if you are doing full-on research, you still have to navigate sort of a business structure.
Yeah.
And so that does give, I think founders like that, and that's why like so many Google DeepMind engineers have left and started these incredible companies, because they've been in a company where they've kind of learned just through living how to sort of build a company, even if they were focused on kind of pure R&D. And so if we started to see more founders doing that, in academia, I feel like a lot of people don't want to do it just because it's very competitive. Getting tenure is not a given anymore. And so, a lot of PhDs are going into the business world anyway. So I think that will also create kind of that profile of founders coming from deep tech that a lot of VC investors really, really like to back.
Do you think there needs to be a layer? Like, especially those coming out from an academic background, there needs to be some kind of
not layer in the sense of they have to go into a big company and then go start. Yeah, but I think there still needs to be like a layer in terms of teaching, like especially if you want to start a company. Like, how can I go to the business school down the street? Maybe at Stanford, like as a PhD, I was allowed to go to the business school and take classes if I wanted to. And so, having some layer where if you are that curious person or entrepreneurial minded, to give access. And if you're somewhere where that access isn't there, having, an exit founder who wants to do something great with his life or her life, say, I want to set up a school, like a founder school or something like this, or a venture university. I think you do need a layer, I think, for the people that just need a little bit more hand-holding. Some people don't need that, of course. But for the ones that do, that layer, I think, would do great for any place.
I want to talk about the fund that you've created for female founders. What was the thinking behind that, and what have you seen from female founders there?
Yeah, so at Anthemis, we have a fund that we launched. It closed in 2023. It's a $50 million fund backed by 4 large LPs in the financial services industry, focused on female-founded companies. So at least one founder needs to be female. North America and Europe. And don't quote me on this because it's always changing. And unfortunately, I think it went down. But I think at the time, only about 2% of venture dollars went to female-backed companies in the early 2020s. Like when you think about it, it was so low. Like it's kind of crazy when female population is 50%. And so little of the VC dollars are going to female-founded businesses. So because at Anthemis we are female-led, our CEO is a woman, is very passionate about backing female founders. We set up that fund to do exactly that at the pre-seed stage, and so that's investing up to $1 million or so at the pre-seed first institutional capital to promote, more female founders to start businesses. And to know that there's a fund that will back them at the very beginning to do that. And so that's something that's still, even with DEI and everything, not as front and center, in this day and age. It's still something that, we're very passionate about. And that fund is still deploying. So if there's any female founders that hear this, please reach out. And I'm happy to put you in touch with my colleagues that lead that fund, and that's still actively deploying. So anywhere in North America or Europe that has a fintech embedded finance, that's kind of the core focus of the fund, is very much, we would love to speak with them.
Are there a lot of female-led, or at least females within the team, in mixed teams, startups within the fintech industry?
Oh, yeah.
Yeah?
Absolutely. More than you think. And I think even more, I guess I'm kind of biased because, we have a fund deploying. So,
So you
I'm
see them all
I'm
the
on the
time.
investment team and we talk about deals that, the team is doing. I'm like, God, there's so many out there.
many.
Every week you guys are bringing a new one. But, I guess going back to kind of embedded finance, every company is a fintech company.
Yeah.
And so, we're seeing not pure fintech we are, but, looking in femtech and looking in fashion, looking in mobility. One of the deals that I worked with our Female Innovators Lab Fund on was a deal that we did in Berlin called Karika. Female founded, one female, two men founders, but they're building the payments infrastructure layer for EVs, between EV drivers and charge point operators. So female founded. I worked with them on that deal. And it was, on the face of it, maybe not pure fintech because it's kind of in the mobility space, but it was still very much within thesis for the fund.
I want to go back to a point that you mentioned about, hypes around like specific markets, and kind of get your take on where do you usually put more weight on, whether it is the market or a founding team, or maybe even like the timing between. A founding team comes to you, but you know that the market is kind of on the low or it's still taking its time. What weighs more when it comes to making a decision to fund them?
So I think first and foremost, it's always the team.
Yeah.
The best teams can always figure it out. And the best teams can pivot. And the best teams can figure out what's the product for now that I can sell into the right customer. The best teams then know how to communicate that clearly and create the story around it. So it's definitely the team. That being said, if the market is if we feel like it's too early, that's something that does weigh on the decision, especially at the pre-seed or seed stage. If it's not full-on team bet, where we feel that the market is a little bit too mature, we might not do the deal. But then also, I guess, on the flip side of that, what we spend a lot of time thinking about is what are going to be the opportunities in the next 12 to 24 months. I think one thing that, I've been thinking about right now is that, we talk about sort of the big hyperscalers, everything sort of in these, these large foundational models. So much of this world is becoming commoditized. And so that naturally just means everything above that, sort of the vertical AI layer, is going to be kind of the hot thing in town over the next couple years. And so it's thinking about kind of how do we invest in that space? What sits on top of kind of like these public LLMs? How does sort of like verticalized solutions sort of really sort of like drive the needle further going forward? And so it might not be the time for that just right now, but in 12 months, I would say we have a lot of confidence that it might be. And so investing right now where the market's not quite there, but let's say we give a founder 24 months runway with the hope, then we take a market bet because we really like the team.
Exactly. And it gives them more time then to prepare and yada, yada. You mentioned the word story. And I had a conversation with another investor who was kind of comparing the different approaches of European founders and American founders towards like pitching. And his comment was like, oh yeah, in the US, it's always about the story and like the narrative that you create. You bring in people in the room to you and, the story that you are creating. Whereas in Europe, it's a little bit more strict. They're like, we have this, I'll hit them with all the stats. Forget like the story. You don't really need to know anything about us because we're just going to tell you, all the facts and the claims. What sells? What attracts you more?
It's really that's a good question. I've been in Europe now for so long that I kind of worked with a lot of European founders, and then once in a while I'll engage with an American founder, and I'm like, whoa! To your point, it's actually quite stark sometimes to me, from a cultural perspective. I think I'm going to defend kind of European founders. Because there is something to be said about being methodical and really sort of figuring out something to then just blow it out of the water, even if it takes a little bit more time. That being said, doing it in the spirit of being more risk-taking. And so speaking also to a friend about this, I think the positive for an American founder, I think, is for some reason you're just kind of conditioned, I think, to put your blinders on.
Yeah.
So you don't really listen to noise. You just say, yeah, okay, the stats, I don't know.
Yeah.
I'm going to go do this. Like, yep. Okay, well, yeah, I don't want to hear this. This is what I'm doing.
Yeah.
There's something refreshing about that because you just know they're just going to go get it done.
Oh, yeah.
Whereas, like, I think that's great. But I think sort of having that open ear to sort of be a little bit more thoughtful isn't necessarily a bad thing. I think Europe's good about building very long-lasting, durable companies. Germany's built off of that in the Mittelstand. You see sort of the innovation triangle in the UK that builds just deep tech powerhouses like ARM. They're not as flashy as maybe like an OpenAI, but it has done incredibly well and took a little bit longer to kind of get to the stage that it is. And so if Europe continues to kind of focus on that, and that's kind of what Europe's good at, that's great. And I think if venture investors get that too, they know the returns are going to come, but Europe is doing it on its own terms and not necessarily trying to be an like American way of doing it.
I want to ask about building what we'd call like impressive technology. I guess it's coming out of what you're just mentioning about flashiness and most European founders building something a bit less flashy, but a little bit more durable. So how do you tell the difference between something that is impressive, but and with something customers are actually going to adopt?
No. We do extensive diligence. We talk to a lot of potential customers. If it's in fintech or financial services, we have a lot of portfolio companies and a lot of portfolio founders in those companies that we ask, hey, would you use a product like this? We're thinking about investing in this company. What are the blind spots that you see? What would you think would be some of the barriers to entry? And so as much as impressive as something might be, very diligent in doing the due diligence on the willingness to pay. What does that actually look like? What would be the barriers to actually be for company or your ICP to pay for it? Yeah, I think that's also going back to our discussion around sort of the market timing of everything. It's really getting like a sense check around not only the willingness to pay, but then long term, what's that like LTV as well too? Because it's you might want to use an app for 10 days, and then you turn and you never use it again. That's not what we're after either, especially for like deep tech. It's really sort of like what's the durability of this as well too. So that's what we try to get a sense of. I think sometimes if it's not like a customer, let's say at a corporate that might take a year or two to convert into a long-term paying customer. Sometimes in these like sort of deep tech, you just need like, let's say if you're in tech bio or biotech, you just need one huge out licensing deal that will make you a unicorn, with a large pharma company, like let's say if you're in drug discovery. So then it's like really sort of thinking about, even if this takes 10 years to, get to the point to achieve that out licensing deal, is that feasible on the roadmap? And is everyone in pharma saying if they figure this out, absolutely, then you just take the bet, even if like the concentration is quite high.
My last question to you is, what is one thing you wish founders understood before they walk into a fundraising meeting with you?
That VCs have typically done their homework or know the market very well, especially if they're a specialized firm. So that means they've probably have talked to many of your competitors or companies doing something adjacent. They probably maybe have invested in them, have gotten burned in the past. They've done their market mapping. They've really done their homework on the space. So you probably need to do less education to them than you think. unless maybe they're a generalist firm and they're just getting up to speed on maybe something new. So, I think coming in saying they might know something, let me know what I should tell you, by the way, if I'm like the founder, if something isn't clear, but now let's drill into how I'm going to win.
Yeah.
And I think that's very impressive when a pitch comes in, it's all about, I can educate you what you need, but I'm going to win the market this way based on, you probably know this competitor and this competitor. I don't like what they're doing. I'm going to do it this way. And this is how I'm going to win. Let's talk about, how I can help you build conviction on that.
I lied. My last question to you is, what is the future you are building towards within like the sector that you're building, or even in the way you are kind of investing in startups?
Yeah, I think building towards, continue to build, as long as I continue to do venture, I'm building towards a world where entrepreneurship is accessible, where you don't need to be the chief scientist of a big tech company to go out and raise $1 billion seed round exclusively. You can be someone that's just very smart, did a PhD at UCL, has a really great idea, and then, we back you. I think entrepreneurship is inaccessible to a lot of people, and venture investors are kind of concentrated in a few areas in the world. So I think it's our job to find and support entrepreneurs and entrepreneurial talent everywhere. As easy it is just to be like, in our office in London or in our office in San Francisco or in our office in New York, there's people everywhere that just don't have the access to get to those places, but are very much capable to build incredible companies. And so, that's a future I continue to build towards, is to make sure, entrepreneurial talent can get access no matter where they are.